Welcome to How to Master Your Mortgage number 10. And my name is Christopher Dunworth and I'm a mortgage broker here in the United Kingdom. This is a very brief video this time. There's a fantastic graph that I'm going to introduce to you. I'm focusing on interest rates because we live in a world today where interest rates here in England of 2 and 3% for your mortgage appear to be normal, but that isn't the case. When I first took out my first mortgage, the interest rate was double digits, and I found a fantastic graph in the excellent publication Money Week, which is a weekly publication, as the name might suggest. And I noticed in one of their issues they had this fantastic graph. So this is Bank of England interest rates for over 300 years, which gives you a really long-term perspective of interest rates. And here it is very simply. So for most of our history, for 300 plus years, the average interest rate was 5%. And you can see from the late 1600s through to the early 1800s, it was more or less exactly that. And then there was a bit more volatility in interest rates in the 1820s, 1830s, going through to about the 1950s. And then I remember under Margaret Thatcher, when interest rates started to spike at 15%, as you can see from the graph. And then they calmed down in the early 2000s. And then of course we had 2008, we had quantitative easing, and we had the bank rates, Bank of England base rates, dropped down to historic lows. So I'd suggest you take a little time just to study this graph, because I think you'll find it very useful going forwards and in terms of financial planning. Many thanks, and thanks for listening.